Thank you, James. All right, everybody. Really excited to be here and emceeing this fantastic event. I have some wonderful panelists on the line with me, Amanda and Verna Grayce. We'll get to introductions in just a second, but I do think we have some poll questions that are going to be rolling throughout this. And so please do respond to those. Make sure you're chiming in, make sure you're contributing to the conversation because that makes it more compelling for you, more interesting for you. I'll start the introductions here in just a second, but you can see the opening question here for you. Which are you representing today, a bank, a fintech, or something else entirely? So please put that answer in. By way of introduction, again, I'm Avery Miller. I'm your MC for today. I spent time at banks, I've spent time at fintechs, and I've worked with both from each side of the aisle, as I like to say, and have really enjoyed my time across all of them. But I'm really excited to be here with Amanda and Verna because they represent kind of the cream of the crop when it comes to thinking through partnership and acquisition, purchasing, acquiring services through vendors for this bank, fintech, partnership, payments product level topic. So Amanda, I'm going to turn it over to you first. Do you mind doing a quick introduction, and then Verna, you follow shortly thereafter?
Absolutely. My name is Amanda Orson. I am the CEO of Curve US. My job is to basically help Curve, which is a UK-based fintech, expand and launch in the United States. I also oversee our crypto offering. Curve, if you're not familiar, is a payments product that has one card that unifies the other cards in your wallet. In the United Kingdom, where it's been longest established, they enjoy roughly 600,000 users.
And happy to be here. Thanks, Avery and Amanda. Verna Grayce Chao. I am the Executive Vice President for Treasury Management Solutions at City National Bank, and we're based in Los Angeles. And I oversee all of our transaction banking, including our commercial card and our deposit products, as well as our partnerships and 3 fintechs that the bank has acquired over the last dozen years.
That's fantastic. Thank you both. So as you guys can see, all of our audience members, we have some great panelists here representing all different kinds of perspectives when it comes to this particular topic. So I say let's go ahead and dive right in. And I believe we have another poll question teed up for our first key topic, which is around the notion of technology. And so the poll question that should be put out there to you all soon is how many here have done a buy build partner assessment in the relatively recent past? So looking to see, yes, I've done one, someone recently, no, I haven't. I've had to debate or argue this particular point as a professional matter, of course, recently. So look, let's go ahead and put it out there with my panelists. Typically, when you come to a build, buy, or partner question, and that kind of thing comes up, it's because whatever company you're with, be it bank or fintech or some other type, you're trying to solve a problem for your users or your employees. And sometimes that's at the start of a journey and you're kind of building from scratch and you're getting to go from nothing. Or it's a very mature journey and you're trying to deepen the bonds with that customer base in some way, but it's all for the point of having a technology help solve some kind of problem for you. So Amanda, I'm going to start with you on this particular topic, but how do you think about working from one of those respective starting points? And what are your considerations, given that starting point, for the tech and the underlying solution that you're ultimately trying to find?
Sure. So we're coming from the position of a startup, and like all startups, our primary constraint is resources. We have to think through what do we do to maximize the return on our people, time, and money, but at a much more exacting level than a larger bank, financial institution, or incumbent. So for us, especially as I think through the process of launching Curve in the United States, it was known that we would have to partner with, for example, a bank to obtain BIN sponsorship to be able to create a card product. We knew that it is not a strength of ours to try and boil the ocean. So we weren't going to create a processor and on the other side of our transaction flow, create an acquirer. We had to partner with those things. The base level strategic partnerships that form Curve in the US were implied. The more interesting development as we've been in market now for just under a year has been as we want to expand the feature set out, making the build or partner decision. And that really comes down to sticking, again, startup, very constrained resources, sticking to what would be a core competency or what ends up being additive to our existing core competencies, something that's in alignment with the actual DNA of the company, rather than trying to do something that's completely outside of it. That's usually where we start thinking partner.
And now, Verna, you come at this from a very different perspective, right? City National has been around quite some time, a very established bank. You mentioned having multiple fintechs that you manage on kind of an ongoing basis. Like, how does your perspective differ a little bit from the one that Amanda's coming?
Certainly. We have the luxury of being a bank that is very vertically focused. And so that really does drive a lot of our decisions, because we work so closely with very specific industries. And as I like to say, we have the luxury of innovating as their bank on the side of their desk. And so understanding what those specific clients are really needing, both from us as a bank, but also in their own financial operations, is really one of the angles that helps us make that decision. And then the decision starts to become, is it something that is truly differentiating for us, and therefore a build or a buy is more important, because we really need to be able to kind of own that experience, or is it something that is an extension of our value proposition? And so a partnership is more of the path forward, because it's not going to be as close to the center of that differentiation, whether it's a capability, a service that enhances our value proposition.
Yeah, it's a really interesting point. Of course, as I mentioned, I've lived on both sides of this, and one of the observations that I've made is certainly that a lot of fintech or technology solution providers, maybe more generally, have the luxury of being very maniacal and a little even myopic in the problem they're solving, right? It's a niche, it's a sliver of what's being done, and therefore it actually gets done really well, right? And usually really efficiently. They don't have to be everything to everybody. And Verna, it sounds like being in a somewhat niche vertical, a specific vertical, also allows you to further take advantage of that exact practice when you are looking at building, buying, partnering with some respective counterparty. Is that right?
Correct, because we can kind of take that sliver view of what is this intractable problem that this fintech is solving, but we contextualize it as kind of a member of that community into the broader implications of what that solution really does deliver in terms of a more secure process, a reduction of redundancy, all of those things kind of end to end. So it's an interesting, if you will say, luxury to be able to partner with fintechs or acquire or build that specific thing, because we really do think of the broader flow of the industry, as it were.
Yeah. Amanda, do you find, like, one could argue that Curve is in a little bit of a niche as well in terms of the solution they're trying to solve for people, but do you find that you can also take advantage of those kind of niche and focused technology startup type companies to help better deliver your more maybe cohesive and fulsome offering?
Absolutely. And I think that being in a startup, it's interesting because you end up becoming more familiar with the newest, latest, and greatest other niche startup that solves a specific pain point in the ecosystem a little bit earlier, because those are the people that you would usually be at a conference with, or their friends, or you have a common investor or something like that. But we, for example, in our onboarding flow, are partnered with companies like Alloy and Onfido because they serve a specific need for us in that part of our life cycle. And again, it's not something that is our core competency. Our core competency is assembling the stack and then delivering the customer a valuable product that's differentiated from everything else in their wallet or on their phone. Our core competency isn't necessarily doing doc and selfie. That's where we partner.
Yeah, Now look, for the audience here, I'm giving you all a warning that I'm about to take us off script with this question, but I think this is a really interesting topic because a lot of times in banks, especially old banks like the one that I currently work for, been around a very long time, you talk a lot about technical debt, right? What we often don't talk a lot about when it comes to the technology component of things is technical complexity by trying to stitch these kind of sliver or niche solutions together into a total value chain. And so Verna, like you talked about having multiple pieces that you've kind of brought together, brought to the table. How do you think about creating that technological complexity versus say a technological debt that you've built in with a monolithic stack? How do you weigh those things?
It's it's hugely important because everything looks great on a PowerPoint and in a whiteboard in a room when you're thinking about it. But then when you really go to execute, whether, to Amanda's point, you're building de novo technology on the most modern platforms and code base, but your ecosystem is not all on that same level. It really can stymie the execution. So we actually do have a framework when we think about how the bank will interact with whether they're acquired fintechs or partnered fintechs. And sometimes it makes for hard decisions because you might encounter a key member of the ecosystem that doesn't align to that architecture. But what we've found is by investing in that modern architecture, so our API framework that we started file-based and moved to SOAP and are now in RESTful, you've got to invest and continue that. But that can actually enable you to be more flexible, but it can also save you from making those contorted decisions that then create that technical debt. So there are places now that, now I'll show my age, like 10 or 15 years ago, if it was very monolithic, but there are places where I do think in your architecture, you can make decisions and they will kind of limit certain things, but they will open up a huge opportunity to scale, to drive security, to do interesting things with data that can be compliant, et cetera. But it's a really important point. And I do think as people are thinking about having a build by partner strategy, you need to have your own point of view on what that architecture is going to be, because it will help you in your ultimate P&L when you're trying to make decisions.
Yeah, thank you. So one extra prompt here for my panelists. I mean, if you all were in a different position than where you sit today, let's say the roles were reversed, for instance, right? Or you just maybe you found yourself a little better capitalized, Amanda, right? Or Verna, you found yourself a little bit more agile, or maybe even a bit more broad than the niche you currently operate in. How do you think you would modify or alter the way you tend to think about the build by partner pieces in the payments ecosystem, right? We're talking about payments products at the end of the day here, and like the payments ecosystem is ever evolving, ever changing. It's one of the most fun ecosystems to be in my opinion. Like how would you think differently about some of these problems if your position of the starting point was actually different?
I can start. From the perspective of somebody, putting myself in the shoes of a bank partner program, for example, or a bank, I would be thinking more about the quality of my APIs, having things off of the shelf for fintechs or other partners to engage with that doesn't require as much heavy lifting because it actually is a material advantage to their speed, recognizing that I have bandwidth and my constraints, not capital. Their constraint will be speed and the technological savvy of the partner that they ultimately go with. That's a meaningful point of difference that I can bring to my bank. I would also be thinking about interoperability across the ecosystem. A big reason why the giant incumbents are the giant incumbents is because you have some cost bias and the switching cost is enormous. It's enormous. But But there's no question we still need to, we're moving towards a non-COBOL, non-IBM messenger queue world. We're not quite there yet, but it still exists. I would be thinking a lot about, assuming the future is something different. What is that future? Is what I'm doing fundamentally creating value in a way that's disruptive to those incumbents? How can I help to lessen and reduce the implied switching cost for the other partners that are working with those giant ones that are still on legacy systems that absolutely can't be faster than what exists today?
And I would take Amanda's thesis and maybe just turn it on its side, which is I would try to think about how am I going to operate flexibly, and I would say kind of more in the servicing and the delivery as well. And again, I think we've been teasing this concept, and Amanda said it in her previous answer. Think of yourself in an ecosystem, right? And I think wherever you, and then where are you in that ecosystem, and how am I actually going, to be flexible and evolve within this, in the servicing and the support and the client engagement, because it's very rare that it's just a fintech and a bank, or it's just or just two fintechs. Like those days I think are gone. You're going to be in a complex environment, and that's where you can have the best idea and solve it elegantly with a lot of modern technology. But then, what does this client relationship look like with you and your other, and maybe 3 or 4 other members? So I would try to imagine that. And of course, no one's going to get it right 100%. But I think if you're contemplating that, in addition to what Amanda said, I think you're going to be able to take advantage of opportunities, and you're going to be able to solve the issues that you didn't expect to come up, right? If you think about that. Was that too esoteric of an answer?
It's payments. Everything needs to be esoteric. If it's not, I don't think we're doing it right. No, this is one of the reasons that I personally love payments. Every problem is a system level problem, right? Because you can't do payments without moving things back and forth across a bunch of different parties. That's the whole point of it. It's actually fun for that reason. Okay, so let's shift gears a little bit, right? And we're going to put up a new poll question for this gear shift. And so for this poll question, we're heading into compliance and regulation. It's everybody's favorite topic. I'm sorry I waited till topic number 2 to bring it up, but we're going to get into it now. And so for our audience, what country or region are you hailing from? Because that'll help us maybe orient a few of our answers in the direction of maybe those laws and regs that are more relevant to you. So as the prompt here to get our panelists going, as some of those poll answers are coming in, there's a pretty long-standing anecdote that banks, at least compared to tech and fintech, carry a significantly more onerous compliance burden. Now, I can say, having worked for both, I do not feel that way. The burdens are just different, in my opinion. But when the rubber meets the road, it is going to be the bank's front door that the regulator ultimately comes knocking on when something goes horribly wrong. And hopefully it doesn't, right? We don't ever want that, but that's certainly the first house call that is going to get made. And so, Verna, we're going to start with you because of that perceived bank burden here. How do you think about your responsibilities as a bank across those 3 different options that we're talking about today, the building, the buying, and the partnering? How do you think about those implications for your compliance and regulatory risk management schemes and frameworks?
Yeah, and I fully concur with you. It is a misnomer that there is, that there's more on banks and less on fintechs. And I can say that because I oversee 3 of them, as well as work inside of a bank. I kind of dial it all the way back. It's one of the points of, regulations and compliance. It's in order to deliver sound offerings to clients that deliver what they say and do not harm. So I just always try to boil it down to something simple, and that will help me then navigate what I need to do in order to achieve that. And then hopefully that should then meet the regulations and be accepted by our compliance organizations. But it really does come down to what are the critical activities that I, as the bank, wearing my bank hat ultimately, need to be able to vouch for, if you will, from a soundness perspective. And the higher the risks are with that, the tighter I want to have, or I would say the more clear visibility I want to have around all of the activities related to that. And so, for example, some of the reasons we've acquired fintechs that we had partnerships with was precisely that. The closer they got to some of our key payments activities, the more we felt like the trade-off between having that be a partnership and the management and the oversight of having that external to the bank, if you will, was not worth it. We also thought that we could actually innovate better, believe it or not, to have them closer to the transaction or to the payment, right? And so that helped drive some of that, acquire. Now we have fintech partnerships that have less of that in terms of how the transactions occur. But there we still are, we lead with that conversation. Like, these are our standards. These are what we expect out of the partnership. And that has helped us then kind of draw those lines and ensure the expectations are set with our partners on what we're going to be accountable for, and then what we expect for them to be able to demonstrate to us.
So Amanda, kind of a similar question to you, but you are in an interesting position in that some of these regulators are going to be the same as what Verna would do, right? The CFPB would come knock on your door if there was some consumer claim, right? The same way they would a bank. But then in other regards, you have providers that you talked about earlier, BIN sponsors, et cetera, which have their own obligations and they might be coming to you for. So how do you think about this problem, both as somebody sourcing something from a bank, sourcing things from banks, but also providing services out that other technology partners are providing to you?
It's exceedingly complex. It's a matrix, for lack of a better way to describe it. Our BIN sponsor bank is Hatch, they're FDIC regulated. So of course we, as the fintech that is partnered with them, have to provide all sorts of documentation for the purposes of their FDIC and other audits related to their state. In addition, we have to think through things like compliance at the state attorney general level, and then state licensure as it varies across the different states because we are a credit product. And then we have the additional complication of a UK HQ. And obviously in the European Union, we have GDPR and other non-regulatory, but big law compliance things to have to deal with. So it's a matrix problem from the perspective of a consumer of, or it's a client of bank partners. We just need to make sure that we're in constant communication. And I mean that, like, constant communication, not just at the CEO level, but at the actual practitioner level. The FinCrime team has got to be talking with their fraud teams. The customer service team needs to be in constant communication with the management team on their side to ensure that we're all sort of reading from the same script. It's so important, and it's so important in both directions. I would say that when it comes to understanding the additional levels of compliance and regulatory risk for your organization as a fintech, it's really important that you not just sit on your hands and assume that the bank's got it. You have so much more to think through. There's so much more that you could be held to, and you have to have a much more proactive approach. And then if you add multiple geographies to it, you have additional layers. So this is probably the most well-resourced and staffed part of our organization in both of our major continental areas, because it's an exceedingly complex problem. And I appreciate, I've not worked at a bank, but I assure you, fintechs are not getting off on this one. We spend a lot of time thinking about it.
Yeah. And what I could say, just to add to Amanda's point, is I would say our most successful buy or partners have been firms that have that mindset. So as those, that are listening, and making those decisions, like adding it, bolting it on the back end is going to limit your whole business thesis, your whole ecosystem. But considering both your own needs, like Amanda was saying, but then your role within your stakeholders, whether it's their own compliance or their regulatory structures, I think I've used this word already twice, but it can be an accelerator because you're bringing something to the table. You're making yourself knowledgeable, right? You're reaching into their world to understand. And if you think you're living in some walled castle, that people are going to come through a moat to work with you, that's not how this really works. And so I do think that mindset can kind of be a business accelerator if you're thinking about it. And banks too, like asking those questions up front, not the tech questions, not the go-to-market questions, but the how are we going to execute together? What are your, compliance, expectations? What are your regulatory? Those are really important level setting conversations.
Yeah, so you heard it here first, everybody. Verna won't buy you if you don't have your compliance house in order. So if you want to get on that list, make sure you're buttoned up. I do want to dig in a little bit more on this one, just because I've had some fun experiences with my regulators in the past lives that I've lived. And I'll go to Amanda first, because I think you started to touch on this a little bit, Amanda. But when you're dealing, but most of the audience here seem to be North American in nature, but we had a little bit of LATAM, a little bit of Europe. So things like GDPR, PSD 1 and 2, like those things kind of apply. When you're talking about multi-region compliance, when you're talking about the non-reg issues, like what the schemes require of you, what NACHA puts out for ACH, what the clearinghouse puts out for RTP, what AWS puts out for Zell use, like all these different things that aren't really compliance, big C compliance with regulators, like how much do you take on and therefore dictate to providers to manage that complexity for you versus kind of trust them to be well run because you have done a solid vetting up front? Or what's the range in the middle of that spectrum for you?
I can't speak to the partners so I came to the company after the existing UK partnerships had already been established. What I can say is that it was the first thing that I went through as we were choosing our acquiring partner, our processor, and our BIN sponsored bank in the United States. Was we needed to make sure that it was, especially for the BIN sponsored bank, that they were very compliance focused. I'm going to be very honest, and I won't name names, but a lot of the BIN sponsored banks in the United States, at least as of a few years ago, run the spectrum of exceedingly compliance focused, which I like to analogize as being a huge pain in the butt up front, but lets you live to fight another day for a long, long time. And that's where you want to be. And Wild West, like where they probably would have let us run off and do absolutely whatever and not been focused enough on the compliance side. That's really scary. That might make you a lot of money up front and then end up with, tears and heartbreak and jail time later. I don't recommend that path. There's a spectrum. You really have to do your due diligence, ask tough questions about the compliance practice and standards of your partners. In addition, we have lots of requirements around SOC 2. I strongly suggest that you look through the SOC security and compliance on that side as well. You are talking about customer data. You are talking about very, very sensitive personal financial information. And now you're also adding in the complexity of not just existent privacy laws like GDPR in Europe, but the potential for privacy law expansion in the United States, CCPA, and then the other states are starting to bring other things online. We don't yet know what that looks like, but it kind of looks like GDPR. You really kind of have to be on the front foot with that. So you want to think through not just the regulatory stuff and making sure that you're working with partners for whom compliance is a priority, because you want to live long enough to not have a black swan event that takes you out before something actually gets traction. But you also want to think through the GDPR, the SOC 2 compliance as well.
I just want to riff on Amanda's point, and it's a little bit of my hobby horse when it comes to kind of more business management. But what she's saying, what resonates with me is it's what kind of business are you going to run, and what are the values that are embedded in how you run your business, and partner with organizations that upfront mirror those values back to you. And everybody can decide what their values are. We're going to be we're gonna go fast and break things. We're gonna, et cetera, right? And I think that's a really important point, and it's like, that's what resonates with me, Amanda, from what you're saying. And again, I go back to, if you're aligned on your values, a lot of those other things fall into place. How are you going to work together? What's your role in the ecosystem? What do you prioritize? And how do you communicate around those things? So that's way off on the tangent, but in terms of thinking, and that's where healthy partnerships and ecosystems come from. And you don't have to then buy everything and put it inside your walls because you can't exist in a partnership where everybody has their own set of values. So it is a bit of a trade-off, I think, that you can wander into as opposed to intentionally lead with.
I think
agree.
Yeah, I agree with both you, Verna, you, Amanda. I think the intentional part is probably the most important part, right? Being purposeful in it is important. I do have a fun little anecdote to share, and I'm curious whether the two of you have had fun experiences like this. I very distinctly recall early on in the innovation office at the OCC, the Office of Comptroller of Currency, there was an innovation office that got stuck. Early on in that little adventure that the OCC had, there was an invite out to a bunch of banks and fintechs in Chicago. We were all invited to come, and at least on the surface, ostensibly, to hear how the Office of Innovation was thinking about partnerships between banks and fintechs. And it was fun. I got there. It was a whole day set up on the agenda, and sitting around the table with a bunch of great bank and tech partners. And the OCC's up at the front of the room, and it was Mrs. Knickerbocker who was running it at the time. And she gets up there and she says, "Hey, great! I'm glad you're all here. We'd love to hear what you all have to say about regulation of partnerships between banks and fintechs." And the room went dead quiet, because I think literally everyone in that room had the same impression that I did, that we were going to hear from the OCC and not the other way around. And so I'm curious. It is frequently the case that our regulator friends, all good intention, but often kind of behind the curve when it comes to where partnerships, where business, where technology has gotten to, right? And they're kind of reacting to things a little late. And when you come up against that kind of struggle, right, where we're already thinking as a set of businesses maybe 2 or 3 steps ahead where regulation and compliance law actually has us, how do you find your way through that quagmire with your regulators? Because I'm sure there are a bunch of banks and fintechs on this call who probably have had to stare into the faces of their regulators and navigate a similar conversation to that. So do you have any fun anecdotes that you could share with the audience, just as maybe like life lessons or little gems that they could take along with them?
I'm letting you answer it first. I'm a fintech. So if I'm talking to a regulator firsthand, it's a bad day usually. No, we were proactive and actually reached out when the administration changed to the CFPB, because we wanted to sort of get on the front foot and say, hey, this is where we want to go, and there's lots of impediments to progress. How do we think through this problem in a way that satisfies a customer demand that we believe exists? So we were proactive about that particular relationship because we thought it would be very meaningful. Beyond that, we mostly try to make sure that we're doing our jobs, frankly, just from a bandwidth capacity. There's only so many of us, and we've got to do a lot of things. So I'm not reaching out to regulators if I don't have to, and they haven't been reaching out to me outside of the normal regulatory compliance, FDIC audit type things that happen. So I would say be proactive when you're resource constrained. Be proactive where you think that it's most additive to the business, or you can further push the industry forward in a meaningful way, and just do your jobs. Like, doing your job is the most and should be the primary focus.
Yeah, I would take a slightly different angle on that, but similarly, my approach is, and I'm lucky enough, we're owned by the Royal Bank of Canada. We have an incredible ecosystem that our bank lives within. So what I try to do is be more internally focused, because there's really smart people that interpret regs internally and write policies against those that we then, work with. But if I can work with them as actually my partners, and educate them on what I'm doing, I can really then live within the bank's risk frameworks, and they can help us interpret whether there is a reg that covers it. And then, we can work through our regulatory relations group. We have lobbying groups. Like, there's ways that we can really reach out and do, through those channels. But my first step is to ensure that, my chief risk officer, even our auditors and our compliance teams understand what we're doing. And as we're going through our product, reviews, that we really do think about it holistically. And that, that so far has been helpful, but I know not everyone's going to have that apparatus to be able, to go through those channels. But educating your internal partners that are smart about, what the regs are and then what the policies intend is super helpful from an execution perspective.
Excellent.
And I should say, I'm speaking from the bias of being the American or the US CEO. Our UK entity, which in the UK, they don't have the same kind of principal membership, is a thing that you can do there. So they don't have to work through BIN sponsors. They are principal members of MasterCard and are a regulated entity because there's PSD2 and e-money and all of that. They are much more forward and talking much more in line with has just been discussed from a bank's perspective, where they actually are on the front foot and talking to the FCA on a regular basis.
Excellent. Okay, so we've gone through technology, we've gone through compliance and regulation. We've got one more topic to dig into, and shockingly, it's probably where we should have started the whole darn thing, and that is the customer. So just before we get into this, one more poll question, I think, for the audience out there. What kind of customers do you serve? Are we talking consumer? Are we talking business? Are we talking both? Just to kind of like we have a little bit of everything here on the panel for this little chit chat. So we can cover kind of all types that people are interested in digging into, but it's good for us to know what everybody out there is interested in digging into. So look, wrapping this up, where we all should have started the thing, the customer. The tech and the regs are what you have to do to solve the problem for your existing or would-be clients at the end of the day. When it comes to payments, where do you see the major decisions for building, buying, and partnering being driven from, either today or in the near future? And just like a random choice, Amanda, I'm going to go ahead and start with you from the kind of like building from scratch perspective, and then Verna will switch over to you for kind of an already built out system. But like, where do you see the big decision points being made about building, buying, or partnering when it comes to payments?
I would say from the perspective of a fintech, or from a startup, you have two advantages versus the incumbents in the market. That's speed and agility. Otherwise, you're just playing incumbent games without incumbent money. So we're usually looking for how do we go fast? And how do we get something into the market that satisfies a consumer demand quickly? And that almost always ends up being partner. We're starting to build exceptions to that rule now as we've begun to have more traction and we have more resources. And now the conversation gets a little bit more interesting on, should we actually ingest this piece of the technology stack and bring it in-house, because it would add to our core competencies, create more efficiency, as Verna had said earlier, almost like vertical scaling, and would it potentially give us a better return on our time for enterprise value and customer servicing? Then that makes a lot of sense to actually start thinking about the build aspect of it. But I would say that from the perspective of the young and nascent companies in the room, it's probably going to be what allows you to go fast and put something into market quickly so that the customer can tell you whether or not there's a there before you invest a lot of money into it.
And if you'll indulge me, I'll get to your answer of today, but I'm going to give you a little bit of a history lesson on where our decision points and how they changed to be where they are today. So about 12 years ago, when we were talking with our industry about some of the efficiencies in some of their payments and banking, what became clear was that we really needed to have that translation layer, which is what kind of we called it, years ago. And so instead of, there really wasn't anything out there to buy that was going to be holistic enough. So that's when we built our API layer that would really give us the flexibility. So that was a build decision. Hey, this is going to be our own infrastructure. It's going to connect into our, DDA system, our pay. We want to own that and have full control over the architecture decisions there. So that was a build decision, and that today there's platforms are out there, and you can think about that. The next stage of our evolution really brought us to a majority of buy. And these were kind of bridge applications that our clients were using. But again, we're then going to be tightly integrated into the bank. And so we started with partnerships and then acquired the three that we acquired. They also fit together, playing in different parts of the payment flows, particularly in entertainment. And so it was a natural, hey, actually we can, the value was in between them, as opposed to, for us as a bank, the value was connecting them, and each one was an end user application, if you will, for a different part of the ecosystem that we were serving. So that was a buy. And now we're kind of in a partner phase, which really is about how do we drive more efficiency in our workflows that end in payments for our clients. So if there's someone out there that is delivering a really elegant solution that is part of the payments workflow, we've built enough and we've bought enough to have enough of a center of gravity that those partnerships now have a natural fit, right? And so that's kind of how we've gotten to today is, but we're kind of operating a little bit more of that embedded banking framework, if you will. And so it gives us that flexibility.
Excellent. That's excellent. I did notice that a significant portion of our audience today actually serves both consumers and businesses based on the poll question. So I want to throw one more thing out there, and we'll start with you, Verna, and Amanda would love to hear your thoughts on it as kind of a follow-on. But when you're catering to more than one customer type, the jobs to be done by those respective customers can start to get pretty complex, right? Just because of the complexity of the underlying clientele. Verna, how do you think about extensibility of a particular solution or particular feature or offering when you're making that build by partner decision in the payments space, right? If it's good for the goose, good for the gander kind of thing, like can I use it over here? Can I use it over there as well? How much does that play into your decision-making process?
It actually plays in a lot because a lot of our businesses are B2B to C. And so it makes us kind of have to, eat our own cooking, if you will. My responsibility doesn't end at the B. While I might not ultimately be responsible for the C, it's really important that I think all the way through the chain. And now it might be that the B2B, the C part is the C is maybe a piece of mine plus something else, right? So it really does require you to be, you word extensible, but to truly be holistic. And that's kind of, it's a danger zone too, because you can build things and then say, oh, wow. And then they go solve their problem for the C part. And you're like, oh man, if we had just thought that far, we wouldn't have duplicated, or we could have drilled through the mountain and met each other kind of thing. So it really is a bit of a mindset. Now it's not always going to work, but if you didn't do that thinking or that thought exercise, you can miss that opportunity. I will say rarely it's a straight shot too, right? It's a piece of it that then is going to need some other experience or some other fintech, partnered in there with. So, but you shouldn't just not do it out of laziness, but you also shouldn't throw it out because it's not exactly the way, you're thinking of it.
Yeah, to build upon that, although we're a fintech and a consumer-facing fintech, we're principally a B2B2C company. We actually have a great number of customers through our Samsung Pay partnership in the United Kingdom. We actually power the Samsung Pay card. And so for us, as we're thinking through the tech stack, we try and have as many same applications as possible. Again, from an efficiency standpoint, we have to be fast, we have to be agile, but we also have to be insanely efficient because we're a startup. The one place where I think most of both categories are going to have to think through is the onboarding. There's just a big fundamental difference between KYC and KYB, and that onboarding funnel is going to be the place where you've got to make very different choices.
That's fantastic. All right, well, we are at the end of the planned agenda. I think what I'd like to do, just before we throw it entirely to the audience and questions, is I'd like to just see if Amanda or Verna, you have any kind of closing commentary, any nuggets of wisdom you'd like to put out there on this topic of build, buy, or partner in the payment space that we didn't have a chance to really get to based on the topics we covered.
I'm happy to start. I think a good way to think about it is the good, cheap, fast triangle. Choose any two. And if you need it to be good and cheap, probably not in-house. You're probably going to be looking for a partner, but also expect it not to be fast. If you need it to be, you know, good and you can spend for it, you probably are going to want to build it in-house. There's a lot to think through, but in general, the reason why you're going to choose build, buy, or partner will come down to some combination of core competency, speed, and how perfect does this part of the stack need to be.
I totally love that, and I'm gonna definitely, I will credit you, Amanda, but I'm gonna use that in the future. I would only say you should be prepared to have all three in your operations, because there's just value and being able to then operate, whether you're building it and owning all of what that means, buying or partnering. Don't set yourself up to just be a partner when you really, or to buy or to build when you really should be partnering.
Yeah, well said, well said. Okay, I am going to go to some of the questions. We've got a couple that are in the queue already. I'm going to toss them out to our panelists here. We're going to start with Stephen's question about open banking. And it's obviously been a very big thing in the UK and the EU for quite some time. We've been dealing with it for a while now. PSD1, PSD2, being an AISP or PISP dramatically changes the landscape of what you can and can't do or might be interested in doing. But a lot of that is coming now into Canada with some of the upcoming regs. There, it kind of touches on the data privacy piece, but FDX has really been driving things from a bank's perspective in the United States, kind of more of a market-driven approach than a regulatory approach. I think what I would distill this down to, and maybe we'll start with Amanda, is when it comes to the overall market's transition into a more open banking environment where data can be more directly and safely shared across entities, does that alter the way you might think about building, buying, partnering for a respective solution?
Yeah, I would absolutely be looking at SOC compliance. Like I'm really concerned at that point about making sure that the partner in whatever that is very sound. Everybody has seen, I don't need to name names, the number of big name financial entities that have been hacked. It's extremely expensive. It's extremely expensive and time consumptive. And honestly, as we've seen in the recent few weeks, trust is the foundation of what every one of us in this room does. It's very destabilizing to trust. So the first thing that I'm thinking about with respect to open banking is definitely security and privacy. But just as an anecdotal comment, the customer demand is far outpacing our ability to keep up with it. And the primary impediments to progress are some stodgy incumbents and the speed of regulators.
I don't have much to add to that. I would double down on what she said in terms of, and it's just good on privacy and data, regardless of what happens with open banking. There's gonna be monetization in that. There's gonna be business soundness in that. So you win either way, regardless.
Yeah, great. So the next question, I really love this next question because I tend to do a lot of regional payment association type events where I get up on stage, especially when I was with PayPal in my own life, talking about partnership and things like that. And you end up with a lot of like tier 2, tier 3 banks in the audience, not the big guys, right? And so for this question, what lessons can community and regional banks learn from either of your collective experiences on bank fintech partnerships, especially? Verna, let's go ahead and start with you. and we'll work the other way.
Sure, and we consider ourselves a regional bank, so we're just a very focused, industry focused, if you will, type of bank. I mean, I think it could be the heyday, like the opportunities for community banks and regional banks to add capabilities securely, flexibly, at the pace and the speed of the money center. I think we're moving into that. Now I'm going to just sound like a broken record. It's really about having the maturity around your business model, your architecture, your risk and compliance, and then who are you serving and how do you want to serve them, and what are the organizations that you're going to let into that, right? The treasurer is your client. And the fintechs will see it as their client too. And if they are bank friendly fintechs, then the world is your oyster. So I think I'm super optimistic, done correctly, that there's a huge opportunity to be a really differentiated community or regional bank, moving at speed, but just ripping technology off the shelf and slamming it in is never going to work. It's got to come from that mature mindset. And that's not the provenance of large, money center banks. It's really about, how you decide to organize yourself to take advantage of these opportunities.
I completely agree. I think, the be fearful when others are greedy and greedy when others are fearful. This is a fearful moment. And I'm speaking candidly as somebody that sits in a lot of the, fintech startup community type events and forums and private conversations. I think that a lot of the banks that we previously took for granted are thinking differently about their programs. They're definitely thinking differently about their risk profile because of recent events. And I think that if you are willing to be creative and you're willing to think through how to have, how to be safe within the current environment, but open to fintech opportunities, there's just not going to be as much competition here in a moment.
Okay, all right, there you go. We got a couple more that came in, so let's go ahead and run through these. What metrics, and Verna, I'll direct this to you, what metrics get you excited when thinking about a partner-led opportunity in the payment space? What are banks looking for there?
That's a really great question. Let me tell you what I'm not looking for first. I'm not looking to be disintermediated, right? I have a role to play as a bank. I have value to deliver to my clients. So I don't need someone to deliver leads to me or, those types of things. And I don't need someone to step in and try to, like I said, disintermediate my relationship. So for me, that's the first thing we're not looking for. We're looking for organizations that have been deemed to add value by our clients, right? And I grew up in large technology organizations that really did know how to innovate. I already said it, at the side of their client's desk. So I'm looking, for metrics that show that my clients value this, and that they are not looking to and they're looking to add value to me as well, right? Everybody knows what banks offer. Everybody knows what our business model is. We're not shy. It's been the same way for 500 or 700 years. So it should be very clear, what I need to deliver for my shareholders and for my clients. So I don't have specific metrics, but I can tell you it's not leads. It's not those types of things. It's deepening the relationship. It's deepening engagement. And it's removing inefficient processes. It's how do we work together to improve our client's experience. And then that generates value for the client, it generates value for the bank, and it generates value for the partner in the ecosystem.
I'll offer a little bit here as an MC, since I heard a lot of this as the lead for PayPal's bank integrations. And I've also asked a lot of it of my fintech partners, either my Capital One time or during my RBC time. One of the key things for me has always been how much exclusivity can I get for the thing? Like if I found value in a thing, there's a significant opportunity that I don't want other people to have it too. And so to the degree that I can get exclusivity in some capacity, right? Be that a marketing exclusivity, a period of time, a region. Like those things become important to me. Certainly a material part of the conversation I would have when I was at PayPal and doing bank integrations, which were truly partnership. Nobody was paying anybody for any of these services, right? It was a true partnership model. The question became, how do I make sure, like the banks would ask me, how do I make sure you're not marketing your products to my customers, right? That was like question number one. And then question number two immediately after that was, how do I make sure you're not letting other banks market their products to my customers, right? And those two things became the key things. And so I think exclusivity and the degree to which you can offer that and still preserve your business model as a tech provider or fintech provider becomes incredibly important, especially to a player of a meaningful size, right? So anyway, that's just my 2 cents there on the topic. Amanda, anything else to throw across the top?
Yeah, from the perspective of doing a lot of the corporate development at Curve, I'm thinking when I'm thinking about other financial institutions or other partners that we might be partnering with, to whom could we provide truly proprietary value? Like for whom would we create, would 1 + 1 = 3? And that's the North Star in our blank sheet of paper when we start writing down potential partner ideas and actually doing outreach. We want to start from, to whom could we add enormous value like day one that they will not be able to create on their own?
Great. All right. So we do have one that is directly for Amanda here in the queue. So Amanda, I'm going to toss it to you. How is a startup like Curve navigating the migration to instant 24/7 payments in the US and Europe? Does the maturity of FedNow and RTP influence who you, specifically in your role, choose to partner with?
I wish they would go faster. Right now, I mean, it's that blunt. I wish they would go faster. The consumer demand is definitely there. I think that we could keep pace from a technology standpoint. Again, the rules apply. Security is top of mind, and privacy is going to be top of mind because we have two-way privacy considerations, both America to Europe and then Europe to America. But it's so frustrating from the perspective of an American who gets to talk to people that already have things they take for granted abroad that we would love to have here. And a lot of it is just an impediment from a regulatory body perspective. Like the reason why we don't currently have real-time payments is because we don't have these great programs. And the reason why they do is because they have things like PSD2. And, I analogize it to a David gets to play on Goliath's turf law. It really does help to even out the playing field, and it actually inspires innovation at a pace that we can't currently match.
Well said. Well said. So we do have one more. I think we have time for one more. And so I want to get it out there. I'm going to break the question up a little bit, though, and I'm going to ask it in 2 parts because I think there's really 2 things that we're trying to unpack here. The first one is around what I'm kind of perceiving to be like the overall quality of the code and the tech that you all tend to see out in the market, right? What there's maybe a perception with some that the quality of the startup code might not be up to snuff for a large rigorous bank, and like having to scale it to 100x the number of transactions per second or anything like that. So I'm going to kind of open that up, and then I'm going to get into the second part, which is more around a safety and soundness piece. But when it comes to that, like quality of tech, quality of code under the hood, what do you all see out there? And does that influence your decisions around building buying a partner?
Yes.
Yeah,
see it.
Yeah, it's a it's a dog's breakfast. And you see everything. And it goes back to what I said. If they, they have a strong, SDLC life cycle, if they're doing SOC work, if you can, it all comes through in the code and how mature and dedicated they are to compliance. Do they have the controls around release? All of that. You ask 5 questions, you'll know which direction you're headed. So, but it's all out there. So you just have to know it and just be smart, ask the right questions, really look under the hood. But yeah, it's getting better like everything, but it's out there. I talked over you, Amanda, sorry.
No, I think we were saying the same thing at the same time. There's definitely, it's all over the map. You have to I love having one of my lead engineers in conversations when we're getting towards a deeper potential partnership or a potential buy of a product, because they really want to understand what's going on. The one thing I'll say is that there's a big delta between the kinds of technical debt. Like if you're talking to people or entities that have been around for 50 years, then your technical debt might be, they are still using COBOL, which is infinitely scalable, but it's super old, and like, you know, guys in tweed are the ones you need to call up out of retirement to go and fix it, PPP loans. When you're talking to fintechs, it's nascent, they're newer, doesn't mean that their technical debt problems are not real. Like they might still have some PHP in there, which is just much newer than COBOL, but implicitly unscalable. And so it's really important that you dig in. Neither pot of technical debt is better or worse, but they do have different kinds of risks.
And faulting an organization for not scaling because they're a startup is, you know, like you can't confuse quality code with scalable code, right? Yeah. Like you can't expect if they haven't scaled that they, you know, that they should be scaling. So again, it can get nuanced. But the first 5, you ask the first 5 right questions, you know what the next 5 questions are.
Yeah. Well, look, I know we're at time. I just want to say it has been an absolute privilege to be emceeing this panel. Amanda, Verna, thank you very much for sharing all of your expertise and your insights here. Thank you, Reuters and James, for hosting this and putting it on and bringing everybody together. It's been fantastic for me. I just want to say thank you to the audience as well for the great questions and the engagement with the polls. It's been a really fantastic hour. I've enjoyed all of it.
Thanks, Avery. Thanks, Amanda.
Yeah, thank you, everyone, and take care now.
Thank you. Bye.